All right. It looks like we have some people getting logged in already this morning. Looking forward to a great presentation with Jim. All right. I see some familiar names. All right. Well, I'm going to go ahead and get started while you guys are all logging in. Good morning to you all, each and every single one of you. We're happy to have you here this morning for Webinar Wednesday. Today, Jim Weigel will be talking to you about transforming your business, 3 tips to improve profitability today. We will do a quick 10-15-minute presentation followed by a discussion. So please feel free to submit your questions throughout the presentation, and then we'll take them during the Q&A period as well. The place that you will ask your questions is down at the bottom of your screen. You should see a little bar that has 2 speech bubbles with the letters Q&A under that. If you click on that, that'll give you the opportunity to ask us a question. I will read the question out loud to Jim. And in the event that we would like to have some more follow-up on the question, I may ask you to unmute yourself and participate with us in the Q&A piece. If you have any questions regarding the Zoom functionality or some technical issues, you can reach me directly through the chat bubble. That's the one next to the Q&A bubble. And that you can have some discussion with me in the background and we can solve any issues you might be having. Just a reminder, this is being recorded, so you are welcome to come back and watch this again in the future or share with your friends and coworkers. With that, I am going to go ahead and kick this off to Jim, and I'll be running the slides for Jim in the background. Oh, and here's our presenters. All right, go ahead, Jim.
Thanks, Emma Jane, and good to see all of you this morning and this afternoon for a few people. We're going to talk about 4 areas we always have the themes to transform our business. And it always starts with people. And the first person is yourself. And if you're leading yourself, that's always a good place to start. If you have other people who follow you, then they need to know that you care about them and what's important to them and their world, as well as what's important to the business. The processes help people do the right things over and over regularly. So we want to make sure that it's really clear what our processes and systems, our plans, our procedures, whatever word we use, schedule, the same kind of thing that we know works is being done over and over again. And then the third area is our product. And we really have 2 products. The product that's we all see, our homes, but then there's the company itself and our reputation. And then finally, we need to be oriented to some sort of profit. Normally that's an accounting or financial profit where our revenues exceed our expenses and costs, but that can also be in terms of some kind of satisfaction, whether that's customer satisfaction, employee satisfaction, trades being considering us a builder of choice, etc. So everything that we're looking at, there's always a dimension of people, processes, product, and profit. So we're just going to talk about one in particular today. Go ahead, Emma Jane. There's really 3 of them that are key that we find that people are missing regularly. The first one is making sure that we determine what the market value or the market price of our home is, and then setting our construction budget from that. And so what we do is we determine what the market price is by making sure we've looked at comparables, competitive market analyses from our salespeople, especially talking with appraisers, and have a really good sense of to what our base home should be and what the key options and upgrades should be priced at. And then we set our construction budget from that. And typically the construction budget is about half of what the market value is. The second thing that's very simple to do, but often overlooked, is that we want to analyze the homes that we are selling. And if we have sold none of them or very few of them, we want to get rid of them and not offer them for sale anymore, because those things are just using up a lot of overhead, a lot of time and trouble from our trades. And every time we build them, we tend to screw up. And then if we have good sellers, we want to turn them into highly profitable sellers. So we want to focus on only offering those that sell the most and have the most profit. And we're always working on improving the profitability of our best sellers. And if the market price drops too much, then we're going to have to look at redesigning our homes, reducing the features to achieve a good price in the next building cycle or two. And then the third one that people are starting to pay more attention to, used to be a very common thing, but we got out of the habit, but become a builder of choice, not only to our trade partners, but to our lenders and brokers. So that's what we'll talk about a little bit more today. Go ahead, Emma Jane. So what I mean is come up with a couple, one or two lenders who are good mortgage lenders for your buyers, and that you're going to make sure that you use them and they pay attention to your customers. Two of them are plenty. Following our 80-20 rule, use one 80% of the time and another one 20% of the time. So you've always got some relationships. You will really understand what their processes are and who funds their mortgages and what's important to them. So learn and adopt their forms, their guidelines, their timelines, and at the same time, they're learning what's important to you. That way you don't miss closings, you don't get cancellations, you don't have to pay extra because somebody screwed up. Meet with them regularly. I would say weekly at first, to resolve whatever issues you have with them and them with you, especially issues on a particular customer in your backlog, and plan for contingencies. The biggest contingencies these days are interest rates spiking or interest rates dropping a lot, both of which have happened over the past month or two. But we also want to resolve contingencies that buyers might have, whether that's a lost job, a change in job, a change in family circumstances. House to sell contingencies are becoming more of an issue. So how is the lender going to help resolve those as well? Also then develop some buy down programs where maybe you're going to buy down 2 points or 1 point for a year or two, or 3 points for 3 years, 2 points for 1 year, etc. Figure out what the customers really need on those buy downs, so you can help them out on their interest rates. Lock programs as well, where you're locking that interest rate, ideally from when the home is started until the home is completed. But sometimes you have to do that twice. The faster, obviously, you can build the homes, the better you're going to be able to use a lock program. But even more importantly, the better your cash flow will be, and the lower your overall construction lending requirements will be. Then finally, provide some customer and broker incentives to work with your preferred lenders, so that you're actually paying some money as an incentive fee, maybe through reduced upgrade and option costs, but also a penalty where someone doesn't get these deals if they don't use your preferred lender. Because a lot of times customers will want to go to another lender just because they think it'll save them 1/10 of a point, but it screws up the closing process and makes them dissatisfied with you and with their home and the whole transaction. And finally, over time, start creating some contingency pools of cash that can be lent out in case there are large increases or decreases in rates, where you might be able to offer second mortgages or even carryback mortgages that you season over time and then eventually sell them in the market, becoming kind of your own mortgage banker for a period of time. Go ahead, Emma Jane. Then whatever ideas you have, for example, in this case, coming up with some preferred lenders, what are the people aspects? Who's going to be accountable for making it happen? Who reports on the various exceptions that might be occurring to the program that you've designed? What are the processes that are involved? For example, what are the key written steps to accomplish a preferred lending closing? Why is each of those activities critical to the company? Not just closing, but the construction process, sales and marketing, even the brokers who are involved in a transaction, and the customers. And how do you assure that the customer does what he or she needs to do on a timely and accurate basis? A lot of times customers are supposed to do things or not do things, like go buy another car and get another loan that screws up their debt to income ratios. How do you make sure that the customer understands that and that you're following up with them regularly as well? And then in the product stage, what do you have to do in a lending perspective at each activity during the construction and pre-construction phases in order to satisfy your lenders? Especially what has to happen when a buyer applies for a loan, around the delivery of the home, as to when they're walking through and making sure everything's okay, and at the closing itself. A lot of times little things are not done, like credit ratings are not updated, or other loans and cash and job status are not updated, and so that can delay a closing. So finally, what else does your customer consider to be part of your product, part of your reputation? And usually that's making it as easy as possible for them to get into their home, and also making sure that their expectations are met. But you have to set their expectations first on everything. For example, what should their expectations be around a mortgage lender? What should they be around a transaction broker or their own for a house to sell? How are you making sure you set them and make sure that the customer understands it well? Go ahead, Emma Jane. And then finally, make sure that you're focusing on each of these 4 areas in every kind of decision that you're considering. So if you're looking at a decision that deals with people, like we might have to right size our company or downsize it because our volume has dropped, then what are the impact on the processes for the people who remain? What do we need to do on profit to make sure that we are continuing to achieve the profit levels we desire? What kind of product changes do we have to make because the price of the product might be dropping as well? So make sure you're considering all 4 of those areas as with each leadership decision that you're considering. And Emma Jane? And then we'll go ahead and consider some questions, and if you got any, I'm open.
All right. Well, we don't have any additional questions quite yet, but I do have some questions for you. And I'm going to go ahead and close the presentation for right now, and then I will bring it back up when we're done chatting. So if you guys, as you guys have questions, please feel free to post them in the chat bubble at the bottom, the Q&A chat bubbles. So for builders in different circumstances, let's say one has falling sales and prices, and another one it has consistent or rising sales and prices. What should they both be doing?
Well, 2 things I would suggest. One is make sure that you have your business plan set up in case sales go up, in case prices go up, and in case prices go down and sales go down from where you are right now. What are you going to do with your fixed overhead that's not personnel related? What are you going to do with your people in each of those circumstances? And make sure you've got that pre-planned and the contingencies rehearsed as to how you're going to handle that. And then the second thing is really be focusing on cycle time. Cycle time from when the pre-construction is to when you think you're going to start the construction of the home, all the way through when the home actually starts construction and you're incurring costs, and through the time that the house is finished and delivered to someone else. The cycle time, especially having very few finished homes and then speeding up and making consistent the construction of your homes, will improve everything financially about your business, especially reduce your equity requirements, reduce your construction lending requirements, improve your leverage ratios, and eventually improve your profits, but for sure improve your cash position immensely. So those are two things both of them should be doing.
That's excellent. And it sounds like cycle time does have a huge impact on your organization.
It does. It's amazing. And it's not just cycle time of the home. It's cycle time of getting the home ready to start. It's cycle time of developing new product or deciding what features we're going to add or subtract from the home. And especially it's cycle time of getting a new land deal all the way from an idea until it's ready to start construction of the first home. Another cycle time we often overlook is getting a new person onboarded and fully up to speed in their job. And that new person may also be an existing person who's now taking on a new job because something's changed in the company. So now we have to onboard them in that new job as well.
And what are some ways that you recommend managing those different processes?
Well, the first thing, I'd say there's three things that we want to consider, and potentially four. One is identify what the processes are. Let's just sit down, write down, here are all the key processes we think we have in our company. Just identify them. The second thing is make someone accountable for documenting the key steps of each of those processes. And there may be 3 to 9 steps. And then the third thing is make sure that you're measuring the results of each of those key steps. You know, is it happening the way we expect, or what kind of exceptions are occurring in each of those steps? Because then we can go manage it. And then the fourth thing is going to be, if you want, go improve it. As you go find things that need to be streamlined, then go through that exact same cycle again, redocument it, remeasure the metrics, and then do it over and over again.
Excellent, thank you. What do you consider high leverage? And what should builders be doing with high leverage?
Now, what I mean, first of all, I'm talking about financial leverage, which is the leverage that lenders and investors are going to look at if they're looking at your balance sheet. And high leverage these days, I would say, is about 2.5 to 1, which is where your loans and your liabilities exceed your owner's equity by more than 2.5 times. Usually that's not too bad. Usually you could get up to 4 to 1, and that's a good place to be. But lenders are going to become more and more cautious. In fact, I would say it's going to be like a watershed event, especially over the past 4 or 5 days, where the banking system is under even greater pressure to have strong assets. They're going to be looking for their customers, especially in the home building and real estate worlds, to have relatively good leverage, which is below 2.5 to 1, and to have profitability. So I would pay attention to that right now.
So if you are a builder with high leverage, how can you manage that? What are some things that you need to be doing now to help manage that?
Two are land and then the cycle time. Land is try not to buy a whole lot more land, especially if you're going to be using loans on that. Or if you are going to do that under some other kind of entity that is not part of your building company. Be careful about that, because most lenders are smart and they'll just wrap everything that you've got together and see what your leverage is. So be careful about trying to do too much land outside where you're controlling the ownership. If you've got less than half of the ownership, then you might be okay with that from a leverage standpoint. The other thing is be careful about starting new phases with additional debt. Try and do them in smaller chunks so that you're not really increasing your leverage for a long time. And then, as I mentioned earlier, cycle time is the best long-term way to control your leverage. So reduce the cycle time for the homes you have under construction, the lots you have under development, and have very few fixed assets beyond those things.
So what are some things when you talk about managing your leverage with cycle time, what are some things that you are able to control? And I know one of the things that Emma's talked about is your fixed, like your indirect construction costs. How is that relationship to cycle time? You know, like your superintendents, if you have your payroll for superintendents, how does that affected by your cycle time? If you have 3 cycles versus 2 cycles, those kinds of things.
Well, anything that you have that you're going to pay on a monthly basis, which is salaries, all those indirect construction costs, the longer your cycle time is, the more months you're going to pay for that. So it's going to increase the cost of whatever product you have if your cycle time increases. Conversely, if you go the other way, if you make your cycle time shorter, then all those things that you pay on a monthly basis are lower cost compared to the homes that you're building. So cycle time has kind of this short-term magical cash effect that improves your cash and your leverage very quickly, but it has this long-term effect of improving your profitability because the fixed expenses that you have, those monthly expenses, get spread over more and more units. Or if your units are going down, you don't have to have as big as fixed expenses in order to take care of those homes. So your superintendents, for example, if your cycle time is lower, you don't have to have as many superintendents being full-time at that. They might be able to go help improve the cost of the homes. They might be able to go work with trades more to improve the overall long-term relationships with them, and then finally your costs. So there's all kinds of benefits that basically more cycle time gives you more resources, whether that's cash or time.
Excellent. So speaking about cash, why is cash and cash flow so important?
We learned that a little bit last week. You know, bank. So I'll just take that Silicon Valley Bank as an example. They ran out of cash, and so their business shut down. And their business was cash, but they were shut down Friday afternoon because they couldn't cover the cash withdrawals that their customers require. And that's what happens to any business. If you don't have enough cash, even though you may be solvent, even though you may have all kinds of assets that are great, if you don't have enough cash, you won't last the rest of the day. So what we want to do is make sure our cash flow is always positive. And some days, some months, it's going to be negative, but overall, it's positive. And we're raising our cash position because that gives us more flexibility. When those land deals come up, we've got the cash. When we've got some short-term closing problems, we've got the cash. When we've got opportunities to hire someone new or put in a new software that we think is really going to improve our productivity, we have the resources to do that. So that becomes not as big a deal when sales are rising, because we even though sales eat up a lot of cash when they're rising, most builders have construction loans, so they don't see the impact of the rising sales. They just feel the closings increasing, and that improves their profitability, and so it looks good. Builders who don't have loans, when sales are increasing and production is increasing, they're feeling the cash impact because they have to fund that cash all the time. So what they want to be careful is that their closings don't exceed their starts very much. That's where cycle time becomes important again. If you lengthen cycle time at the same time that sales are increasing, which happened from mid-2020 through really last year, the middle of last year, if your cash flow is really going to get hurt. Unless you're borrowing a lot of money, then it feels okay. But once it switches and you're borrowing a lot of money, and your closings start declining, then it starts hurting because you're not generating the cash flow from borrowing, and you're going to have to cut your staff and cut your prices and cut back really fast.
So you mentioned the cycle time. Are there any other things that builders should be thinking about to improve their cash position?
Land is the most important one. Don't buy land unless you absolutely need to replace what you had before, or you're buying that land at less than its replacement cost. Those are the two things that can get a builder in trouble with respect to cash flow. The third one that kind of sneaks up on you is if your volume is declining, but you're not reducing your fixed expenses proportionately, that will hurt your cash flow, but it'll just hurt a little bit at a time every single month. The other one that we have to be very careful of is if our sales prices decline, then our cash flow is going to start hurting fairly quickly over the next building cycle, unless we start reducing the features and the costs of the homes that we offer for sale.
Good point. So speaking about that, I know we talked a little bit about this last week at our executive summit. A lot of builders are being faced with the issue of having to reduce prices, and some of them may or may not be evaluating their direct costs and how to reduce the cost of the home. Are there some other things besides direct costs that builders should be looking at in order to meet the market as far as sales price is concerned and maintain their profitability?
Well, let me make sure I get that question down correctly, Emma Jane. So sales prices are declining.
Yep.
And so we have to ascertain, is that a permanent decline in the market price of our home? And if it is, then we must reduce the direct costs on that home. First of all, by eliminating the waste. And most builders have 3 to 10 points of waste in their homes right now. And what I mean is just the invisible waste that your customer does not care about, and it's just costing you weight and not getting any value from it. And then the second thing to reduce are the features that customers are not paying you for, including your margin. So reduce those features and then reduce your sales price by the direct construction cost associated with that feature, and you'll start getting more in line with what the market price is. And if you still can't do that, you got to redesign the home. Now, if a builder is not doing that, if a builder is not reducing direct construction costs in response to market price reductions, that builder will go out of business. It just the math does not change. That will screw up their business. And so if you are that builder, don't do that. If you have some concerns about that, please call us. If you are another builder and you are seeing a builder do that, then just keep letting your competitor make that mistake, and then be ready to buy the land at a good deal to help out the economy. Because builders who do that regularly, and right now, based on some information from that executive summit, 38% of the builders are not changing their homes. So at least almost 1 out of every 2 or 3 builders that you see is either going to have to change their mindset or they're going to run out of cash.
So what are some things that they need to consider if they're going to reevaluate their product line? Or is there a different mindset that you need to have based on your product line? You have entry level, you have the 55 plus, you have the move up buyer. What are some things that builders should be thinking of as far as maintaining profitability and reevaluating their products? What are some things that you think they should look at based on their market?
Well, there are a lot of things, and I don't want to. We have entire seminars and workshops and stuff that go through a lot of those things. But let me just highlight a few that I notice a lot of builders not paying attention to. Okay. One is understand your customer really well. So you just mentioned several different target markets. So understand who they are, understand who is buying your home. So a person who is 55 plus and wants a really nice home and it's downsized from where they were, they want a lot of nice things in their homes, but they're also willing, you don't have to load up the home. You can give them options and upgrades and they can choose that. Same thing for a first buyer, someone coming out of apartments and maybe they have a kid. Well, they're trying to get into a home, so don't load it up with all kinds of things that you think you have to have for the identity of your company. But you're making the decision as to what that buyer has to pay for rather than letting them make that decision. So pare the home down to its lowest common denominators to what those buyers absolutely must have, and then allow them options and upgrades to put back in the home, whatever it is they actually want to have and are willing and able to pay for.
Excellent. Thank you, Jim. I have no more questions at this time. Does anybody else, we have a couple more minutes if anybody would like to submit a question for Jim. He is brilliant at all of these different things, particularly having the experience with banks. So if anybody has any questions on banking or financing in particular, he is happy to answer some of those questions. I'm going to put while we're waiting to see if anybody else has any questions, I'm just going to put this up here so you guys are aware of what's coming up. We have our Managing for Profit seminar that's coming up in 2 weeks. A lot of the things that Jim and I were discussing today will be presented in our Managing for Profit seminar. That is in Atlanta, March 27th through the 29th. We have a few more spots left in there. Here's just a slide that shows you some of the different services we provide to you, including rebates, training, consulting, surveys. We do a builder of choice survey, an employer of choice survey, and a customer satisfaction survey. These are great surveys that help you understand how you are how you're impacting your trades and what their opinions are of you. It's confidential, and you get great feedback where you're able to make any adjustments that you need to make in your business. As far as rebates is concerned, with builder partnerships, we offer rebates. We have partnerships with all of these different vendors. So if you're working with any of them, we're happy to help you coordinate a rebate with any of them. We have some companies that are making significant rebates. They're using those rebates in different ways, maybe for a holiday party at the end of the year or bonuses or any of those kinds of things. And of course, we have our consulting team. So if anything that we talked about today is of interest to you and you're looking to have someone come in and help you go through some of those questions and ask those questions of your organization, they're able to help you individually. Oh, thanks, Troy. Troy says, excellent presentation and information. He always learns something valuable to improve his business. Thank you. Nice job, Jim. Thank you, Troy.
Well, Troy, I learned from you and many other of the great builders. So thanks for continuing to listen to this. And
yeah.
if you or anyone else has any comments or questions about that you might disagree with anything I said, I'd love to hear that question or comment as well. That's what helps us get better.
Absolutely. Absolutely. And Troy was very instrumental in sharing some of his thoughts of the things that he's learned over the years, becoming a great builder. And just right here is our schedule of seminars. We have added 2 new seminars. So if you haven't seen these ones yet, we do have a Scheduling for Profit, April 20th through the 21st, right here in Denver, Colorado. So we'll be going through cycle time and helping you guys get that in line again. Obviously, as Jim talked about earlier, there's several benefits to having your cycle time in order. And so we'll be talking about that at Scheduling for Profit. And we also added another superintendent in Raleigh, North Carolina. By request, we had a bunch of people asking for a second superintendent for the spring season. So we did go ahead and add that for you guys so you can get your superintendents trained up. And then we have Webinar Wednesday, which you guys are here for Webinar Wednesday. We have another one coming up next week with Kim Dixon, and she's going to be talking about purchasing and purchasing best practices. So be sure to join us next week for that. We will not have one on March 29th because we will be in Atlanta for Managing for Profit. So we will not have one on the 29th. But with that, unless anybody else has any other questions, we want to thank you guys for joining us. Thank all of you for joining us today for Webinar Wednesday. Feel free to share this recording with friends and coworkers. And if you have any questions, feel free to contact Jim directly at jim@finconsulting.com. And if you'd like for him to come sit with you and visit with you, he's available for that as well. Again, my name is Emma Jane. Thank you again for coming to Webinar Wednesday. And Jim, thank you so much for offering your expertise and sharing your knowledge with the builders today.
My pleasure. Thank you all. Good luck and take care.
Have a great day. Bye-bye.